Okay, good afternoon, viewers. This is Charles again, and today we are going to continue our series of cost accounting, and we are going to be handling overheads. The last video we talked about cost classifications, and these are the ones we are going to find how we can segregate them, how we can segregate the mixed costs into the variable and the fixed component. So we can kick off. The question we are going to be handling is question hope you can see the whole screen. It's question, we're going to use this question 6 and this is CPA past paper October sitting 2021. Then this one is 2019 May. So let's first consider this one for October 2021, and we compute the higher method. As I said earlier, that we are going to be concentrating more on the higher method and the least squares. So can kick off now. Go to solutions. This is solution 2021. Okay. So what I want you to get in mind, if you are using the higher method, we said we compare the highest activity level and the low activity level. We are choosing those activity level which has the minimum and the maximum. So can go on. Maybe I can give you a brief introduction for those who can't get it right. We can say that when you're using this method, what we want to find out is that we want to separate these mixed costs and the variable costs. But the only way we can separate them is choosing, let's say we can use the equation of a line. We said from our mathematics that the equation of the line equals, it's y equal to mx plus c, and we said this c we said the y was, this was the constant, this one was the constant, then this one was our gradient, m is a gradient, this is gradient, and our x is the x coordinate, and this is the y coordinate. So you know from mathematics that when you're finding gradient, we get it by getting the y coordinate, y2 minus y1 everything is over this. everything is over y over x2 minus x1. So when you use this, it will be that this y2 will be the y coordinate, of which it will be the highest coordinate minus the lowest coordinate over the highest minus the lowest coordinates in terms of the x values. So when you compare with that, it is the same way we are going to be using this method, because you know from the when you want to compare this equation of the line with our equation of total costs, this y, the equation for the total cost is equaling to y equal to bx plus a, or a plus bx, and this a becomes our total fixed cost, and this a is representing this c within the equation of a straight line, and this b is the variable cost per unit, which in these terms representing the m, which is the gradient. And the way we got the gradient is the same way we are going to be looking for the variable cost. And this y is representing total cost in this equation of costs. This is a general formula and it's recognized even if you use it, that y equal to a plus bx. It's a recognized formula so long as you can explain the coordinates that this is the total costs. If you don't use this one, you can use this and you try to explain the letters you've used. So that's it. But I recommend you use this one because this one is allowed. It is acceptable. You can call it a plus b or b plus bx plus a. Now what comes from this is that this b is the one we are looking for because we don't know that one, and our b will be equaling to the variable costs, and the a will be equal to the fixed costs. Then this x will be equaling to the output, and the y will be equaling to the total costs. So we are going to be using this along with our computations we are going to be handling. So hope you can be able to remember this because we are going to be using them. Now, when you look at our question, October 2021, they have given us that the management accountant of TPL has further provided the following cost data relating to bridal magazine for the 6 months period ending 31st October 2021. So we've got the months, we've got the output in terms of the magazines, the number of units, then we've got the total costs. This total cost is inclusive of the fixed and the variable costs. But remember, when we are using high-low methods, the main emphasis or the main assumption is that we assume that the total fixed costs within, which are within this item, they are fixed or they are constant at any given level of output. If you find that the total cost within the total fixed cost within the total cost is not constant, then it means you can't apply the high-low method. So we are going to be looking at this. Then we shall get another question which has a step up in the fixed costs, so that we know how to handle that. Because when you have the fixed cost which is a bit different, you can't use high-low methods. Maybe if you first make adjustments, as we shall see in the other question, which has some step up in the fixed costs. So we compare these output, the level of output, and in this scenario, the level of output is in terms of the magazines they produced. So when we check what will be our highest and what will be our lowest, here when you compare this, you'll find that this one in August we had 10,000 units of magazine. So this one is going to be our highest. Our highest is this. So we can copy it and we take it the other side. Paste it here. And this is our highest. Put here highest. Then we check our lowest activity. Our lowest activity level is this, which has 7, it happened in May, which has 7,500 units of output. Then this one is going to be our lowest. This is our lowest. So we know from this equation, this gradient, when you're finding the gradient, it will be now our highest. This is the highest. So when you are finding the variable cost, because we say the gradient is the same as the variable cost per unit. This one is supposed to be variable cost. Is variable cost per unit. Okay, we are saying that the variable cost per unit, we shall get the highest activity, then we'll less the lowest activity. You can just find it from here. It will be cosine this 10,000 minus the 7,200, the 7,500. Saying sorry, it will be this cosine 10,000 minus the 7,500. It will give us 2 is giving us that. Then also this one will be 75,500 minus the 58,000. This will give us is 17,500. So the other way someone you can express this one, you can take that, because when you get this, to get our variable cost per unit will be equaling to this. It will be this one divided by this. Then it will give us 7 shillings. These shillings, this is the variable cost per unit. So if you want to get the total variable cost, you will be getting, let me highlight this one, make it a bit broad. We say this is our unity, the variable cost per unit. So we want to get our total variable costs. Total variable costs, variable cost. This will be equaling to, because we said this, the fixed, the total variable cost is this bx. So it will be our b, which is the 7 times any level of activity. Here we are saying you can choose. The first step, you say choose either. We are saying we choose any of the activity levels, either high or low. Either the highest or the lowest. So we can take any, and in this time I'm taking the lowest, and our lowest was this, was in May. I copied that and I paste it here. So when I take this is our lowest, so I'm going to use this activity level. It will be, to get our total, our variable cost, total variable cost will be equaling to 7, because 7, this cosine that times this is the, sorry, it will be multiplied by the 7,500. It will give us a total variable cost of 52,500. So if you want to get the fixed costs, then the fixed costs, we say they are going to be equaling to the total costs minus the total variable costs. Remember this one, at any given or within a relevant range, and our relevant range is here, is the level of output which they gave us. So when you compare from our lowest the lowest activity level we chose, the total cost is 58,000. Then the total variable cost is this 52,500. So to get the fixed cost, it will be fixed costs. Fixed costs will be equaling to cosine this 58, or it will be this. It is 58,000 minus the 52,500. That will give us 5,500. Now this is our total. This is our total fixed cost. If you choose, let's say we take the highest activity, it should be also giving us the same information. If we take the highest, then it will be, the variable cost will be equaling to variable cost, saying the variable cost will be equaling to this. This is the variable cost per unit, which is 7. It will be cosine this, multiply it by the level of activity, which is 10,000 units. We'll be getting 7. We'll be getting 70,000, and these are our variable costs. So to get the total fixed cost, the fixed costs will be equaling to, they will be equaling to 75,500 minus the 70,000, which is the total variable cost, and it will give us the same total of 5,500, and this is our total fixed costs. And we said that total fixed costs are constant at any given level of output, because here you are seeing at the highest level of output, which was 10,000 units, the total fixed costs remain the same. We incurred the same amount as in 5,500, even when the level of activity, which was 7,500, we incurred the same total fixed cost of 5,500, and that happens within a relevant range. And we shall see if the costs exceed the relevant range. You may see that the total fixed cost will change, but there will be just a step up or an increment, and at that level it remains constant until it exceeds another range of activity. So that's it. And that's how we calculate we segregate these total costs, because from here you can even, the management can take the decision of how they can control these variable costs, because the variable cost at the lowest activity level, it was 52,500, but when we increase the level of output, they also increased. So it means they are varying in the same proportion to the level of activity, because we are seeing it is, the variable cost is 7, but we are multiplying that figure to any level of activity. And if you don't produce, that's why, because when you don't produce, it will be 7 times 0, which will give us 0, which confirms us that at 0 output, we don't incur the variable costs. We only incur the fixed cost because even if you're not producing, that amount of the fixed cost is still paid. So that's it. We are going to look at the least squares method of how we can separate these variable costs in the next video. Thank you for watching.